Hi guys, welcome to Gold Today. This video is brought to you by the coach. Remember, always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. We are going to start our video with the economic calendar. On the economic calendar for Wednesday and from the United States, we are waiting for the following economic headers to be released. The JOLTS job openings for month of August and Fitch Powell speech and the FOMC meeting minutes, all to be considered as market movers. That's all for the economic calendar. We'll move on now to have a look at the numbers. On the last trading session of Tuesday, we have had a trading range from 1487 to 1508. Numbers are rounded and the market is still open. The gold spot is expected to print a close price above 1500. It's actually trading now about 1505 to 1506. The number is rounded and the market is still open. Gold is trading in an uptrend above its all daily simple moving averages, except the 50 days daily simple moving average, and the momentum is strengthening and it's about to print a buying signal. For the RSI readings, it's moderate, 67 weekly, 68 monthly, 49 to 50 on the daily chart, and the supports are seen at 1502, followed by 1493, and the major support line at 1480, and for the resistance levels, it's seen at 1505, followed by 1510, then 1515. That's all for the numbers. We'll move on now to have a look at the trading strategy. Today was a special day for gold and silver, as the headlines about the proposed trade deal between the United States and China from a side, and the firm president of the United States, Mr. Donald Trump, who said that a trade deal that is not 100% in favor of the United States is going to be rejected from the other side. Both put severe pressure on the U.S. equities, which sold off heavily to the extent that all the gains that have been achieved in the last trading sessions been erased. And both gold and silver, as to be safe havens, benefited of the sell-off in the equities and the rising uncertainty or state of uncertainty in the marketplace. However, when the data got released, the PPI came also below forecast, and it added more steam for the sell-off in the equities and more support for gold and silver. And in addition to this, also we got some sanctions on some officials in China, and also in addition of that, Fed Powell said that they are going to increase the size of the balance sheet. The Federal Reserve Bank is going to increase the size of its balance sheet soon, which means quantitative easing and printing more dollars and buying back the bonds, which will make the dollar 100% cheaper. Technically, gold is trading in a bullet trend, and it's below the 50 days daily simple moving average. If we are to dip more, as I said in the last episode, the 1480 shall provide extreme support. Buy from there blindly. Beneath that, there is 1450 and the 100 days daily simple moving average. To the upside, gold must clear 1519, then you have only 1560. Traders are gold most likely is to stay range bound in the coming few days, and traders are uncertain about the trade deal, so buying dips is the best strategy at this time. Be careful, don't be cute and short gold and silver at this point of the time, because we are surrounded with so many time bombs in Hong Kong, Iran, and the trade deal between US and China, and so many other issues, the Brexit, so many other issues. Any of them get materialized, gold could rotate $50 to $70 in a few seconds. So you don't want to be cute and short gold at this moment. The best strategy is to buy the dips or buy directly on the market. Gold is going to rally. That's all for today. Thank you guys. I'll see you tomorrow in the other video.